Hello everyone and welcome to the first ever episode of the Magnus Capital Trading YouTube channel. Today we're going to be going through why we took this trade yesterday on NQ or NASDAQ Futures, which was a short play, and how we managed to bag a nice 1 to 3.58 risk to reward. So what did we do first? Well, first when logging on we had to find our bias. So we opened the H4 and saw that on Wednesday, which was the previous day to this trade, we took out Tuesday's high. This is great as we shifted market structure, turning that lower high into a higher high, which meant that we were inherently bullish on the higher time frame. Same thing happened on the H1. We ended up taking out Tuesday's high, making Wednesday's high, shifting the lower high into a higher high, and meant that we now had this previous day high as a clear draw on liquidity for Thursday's trading day. There was also no major red folder news to look out for on Thursday, which was great, obviously apart from Donald Trump tweeting about the trade war. Well, looking at the hourly, what did we see or what did we want to see happen before we took the trade? So we had this obvious draw of liquidity, also acting as low resistance liquidity as the previous day high. Through Asia and London, we saw bias play into the high time frame bias of higher highs and higher lows, meaning that we were inherently bullish. But as New York opened, we ended up raiding these highs, or the previous day high, and closing the hourly below it, meaning we failed to see an hourly continuation above the high, which meant that we were now going against our bias. So now that our bias had potentially been shifted, what were we looking for confirmation? Well, now we had seen an H1 sweep of the previous day high, which turned low resistance liquidity into high resistance liquidity, which also meant that this area now was acting as an hourly SFP or swing failure pattern. Also, we failed to close above the H1 sell side imbalance that caused this whole kind of downtrend choppy move last Friday, as Trump was talking about trade wars and started implementing the 100% tariff on China. The fact that we failed to close above these levels meant that we would now scale down onto the lower time frames and be looking to take a trade to the downside, as we were now seeing a low time frame change in state of delivery. So now as we scale down onto the 5-minute, what were we looking for to execute? Well, we saw a straight inversion of this 5-minute gap that caused the hourly sweep. Furthermore, if we scale down onto the 1-minute, we were seeing signs of a shift in market structure. As we zoom in here, we can see the price was making higher highs and higher lows. However, after we saw the inversion of the gap, we saw that there were lower highs being formed and higher lows. So essentially, price was shifting 1-minute structure and seeing a retest of the 5-minute gap, failing to break through. So where were we looking for price to draw towards for our take profit levels? Well, clearly we had 3 sets of low resistance liquidity. We had New York low that hadn't been taken out, we had London's low that hadn't been taken out, and we had Asia's low that hadn't been taken out. Also, we had this low from Asia here that you could have also used as TP3 rather than using Asia's low as TP3. That did cause Asia's high. So TP1, TP2, TP3 and TP4. Overall, this trade went all the way down perfectly and we managed to bag a nice 1 to 3.58 risk to reward in just under 3 hours. This was our first YouTube video, everyone, so we really hope you enjoyed it, and if you would like to see more of these kind of videos again, make sure you leave a comment or just like and subscribe, and yeah, hope to see you in the next video.
See you in the next episode. Magnus out.